for which we also need to report in the Caro 2020, and there has been increase in the scope of the reporting, because earlier only deposits was there. Now redeemed deposit has also been included in the purview of the reporting. Further, we had a session on the loans and advances under section 185 and 186 of the Companies Act, and the trilogy. This is the third one on AS 18 and account and companies and related party transactions as per section 180 of the Companies Act 2013. We must be aware of the fact that the ROC is now scrutinizing all the balance sheets which are being filed, and I have come to know that many notices has been served by the department to the clients, to the corporates, as well as to the chartered accounts on various non-compliances. If you go through our balance sheets, the balance sheets which have signed, you will find that there are many instances where the related party disclosures are not in accordance with the Companies Act 2013 and also in accordance with the Accounting Standard 18. So this is a very, very important seminar, and we are now in the midst of the audit season. So this is a chance to refurbish ourselves, to go through our textbook and understand what is exactly the provisions of the Act states and how we have to disclose in our audited statement of accounts. And so CS Bhatia is a great speaker, and I would like now request my co-convener Vishnukant Agarwal to introduce Manoj ji.
CS Manoj Kumar Banthia is an associate member of the Institute of Company Secretaries of India and a fellow member of Institute of Chartered Accountants of India. He has also been the past chairman of the Institute of Company Secretaries of India, Eastern India Regional Council. He is a managing partner of MKP and Associate practicing company secretary. He has the experience of practicing in the field of corporate laws for around 30 years. Mr. Bhatia is the secretarial auditor of numerous reputed listed companies and has also been engaged as a retainer for providing consultancy services to them on various matters related to corporate laws and allied laws. His core area of practice are corporate litigation, the Insolvency and Bankruptcy Code 2016, appearances before the NCLT, NCL80 and Regional Director, corporate restructuring, compounding of offences, secretarial audit, providing advisory and consultancy services in the field of corporate laws and SEBI related laws. Mr. Banthia is also a trainer and regular speaker at training programs and seminars on various subjects in the areas of corporate laws, corporate restructuring, etc., conducted by ICI and ICSI. He also conducts classes for professionals on such subjects. He has also trained officers of Ministry of Company Affairs and Comptroller and Auditor Generals of India. Welcome, Manoj Bhatia ji. Pramod.
Now, Bhatia ji, please, floor is yours. And
thank you very much. I am in the midst of recovery from acute diarrheal infection, and hence I may not be as loud as I normally am, but I hope my voice is audible. Am I audible to everyone?
आवाज कम आ रही है.
Am I now audible? Is it better?
थोड़ा सा साउंड बढ़ा दीजिए ना. आपकी तो आवाज एकदम बुलंद है, इतनी स्लो हो गई.
That's what I said, that I'm just recovering.
ये थोड़ा सा टेक्नोलॉजी का फर्क है.
No, I was unwell and I'm recovering from diarrheal infection, so that's the reason why I'm slightly weak. In any event, thank you, Mundraji, for inviting me as a guest speaker on a topic which I am very, very closely associated with, related parties and decoding the complicated web of related party transactions. I am very happy that my topic today is limited only to related party transactions under section 188, and I'm supposed to deal slightly with Accounting Standard 18 as well, which means we are primarily looking at compliances in the hands of private limited companies or unlisted companies to whom Ind AS 2824 is not applicable. The level of compliance in case of listed entities and entities to which Ind AS is applicable is slightly different compared to compliances which private limited companies and other small companies are required to do. This topic suddenly gained lot of interest. It assumed lot of significance. It gained lot of interest primarily because of an amendment that came to LODR. Am I audible, please?
Yes, you are audible.
Yeah, thank you. I'll just slightly share the screen and then proceed further. Right. Okay. Is the screen visible to everyone?
Visible.
Fine. So what I was saying is that this topic suddenly gained momentum because of an amendment that came on 9th of November 2021 to the SEBI LODR regulations. And immediately thereafter, there were circulars issued on 22nd of November, followed by a circular on 30th of March. And then there was a small guidance note that has come in from SEBI on 25th of April 2022. But those all were in relation to listed entities and the compliances in respect of related party transactions which listed entities are required to do. I have addressed several seminars on the amendments that had come to LODR with respect to related party transactions. I am today not required to deal on those, but I will today slightly deal with the requirements of Ind AS 24 as well, besides talking about AS 18, for the simple reason that it is only then we will be able to understand the difference that has come in terms of disclosure, in terms of compliance, in terms of applicability in respect of both these accounting standards, when you compare both these accounting standards. One thing that you need to clearly understand is that Section 88 or any other related provision in the Companies Act which deals with related parties or the requirements of the SEBI LODR, they are all compliance requirements. They are requirements which have to be complied with before undertaking a related party transaction. Sometimes maybe even after undertaking a related party transaction. But accounting standards are disclosure requirements. They are requirements whereby once a transaction which has been done in compliance with the requirements of either Section 188 or the Companies Act or the LODR, the manner in which it is required to be disclosed in the financial statements is governed by the accounting standards. In the past, we have seen several instances where a particular transaction may not be covered by Section 188 at all, but it would still require disclosure under accounting standards in terms of AS 18. So these slight differences have to be understood. There are several factors which you need to consider before you finally decide on the compliance level as well as on the disclosure level. The status of an entity, whether an entity is a private limited company, a public limited company, a listed entity, or a public limited company with some specified thresholds, that will decide what would be the level of compliance which that particular company is required to do in respect of related party transactions. Similarly, the type of the transaction, whether a particular transaction is a related party transaction, does Companies Act Section 188 for that matter covers all kinds of transactions, or there are transactions which are left out of the scope of Section 188, and whereas whether accounting standards do they cover all the transactions, we have to clearly understand the nature of transaction to understand the compliance that we are required to make. So all these factors taken into consideration will decide what would be the compliance requirement for a particular related party transaction and the manner in which that particular related party transaction is required to be disclosed in the financial statement. I will take you through the provisions of Section 188. I will also touch upon the provisions of Section 177 for you to slightly understand that in respect of certain companies, while AS 18 may still be applicable, there may be requirements in addition to Section 188 that you need to comply with in respect of related party transactions. And then we will touch upon Section AS 18 and we will also touch upon Ind AS 24. Before that, we need to understand who is a related party. I mean, we have to apply, the compliance has to be done in respect of a transaction done by a reporting entity with a related party. But the first question that comes to one's mind is, who is a related party? The term related party has been defined in different ways. Section 2, subsection 76 of the Companies Act has a definition of the term related party. The LODR defines related party with reference to the Companies Act as well as with reference to the accounting standards. Accounting Standards 18 lists out what related party relationships are covered under it. Ind AS 24 gives out the whole list of related party relationships that is covered by Ind AS 24. Though not relevant, but only for the sake of academic interest, even the Insolvency and Bankruptcy Code Section 5, subsection 24 defines who is a related party. We are not dealing with the others. We are only concentrating on Section 2, subsection 76 as to who is a related party. I am sure you all are aware, I'm not going much into the details of who is a related party, but to quickly take you through so that you are able to understand the wide canvas on which the picture of related party is painted under Section 2, subsection 76 will be clearly understood once you go through this definition. Your director is your related party. The director of a reporting entity is a related party to the reporting entity. His relative is a related party. All the KMPs have a particular definition under the Companies Act. Those KMPs and their relatives are related parties. Any partnership firm in which either the director of the reporting entity or his relative, even if they happen to be partners, then those partnership firms are also related parties. All those private companies in which director of the reporting entity or his relative is either a member or a director, then all those private limited companies are also related parties to the reporting entity. I hope you are able to understand the seriousness. You are able to understand the wide gamut. If my company has 3 directors, and if those 3 directors have 15 relatives, and if those 15 plus 3, 18 people happen to hold shares in 180 private limited companies, then all those 180 private limited companies become my related parties. Because my director or his relative is either a director or a member in those private limited companies. So you need to have disclosure from all the directors as to who, in which private companies are they holding shares, in which private limited companies their relatives are holding shares. Public company, of course, the situation is slightly better because here the director of the reporting entity, besides being the director, he should also be holding more than 2% of his share. He, along with his relatives, should be holding more than 2% of the paid-up share capital of that entity. That's much easier to understand. That's much easier to even quantify. Then you have a very, very wide clause which says that any body corporate whose board of directors or managing director is accustomed to act in accordance with instructions, directions, or advice of one or more directors of the reporting entity. So in a group, suppose there is a company and the promoter of the group happens to be a director in that particular company, then all the other companies in the group, they are surely accustomed to act as per the instructions or advice or directions of one of the promoter who happens to be a director of this company. And then by virtue of this particular clause, all those entities become related parties. But then again, this would depend on the factual matrix of a particular case. If you are able to rebut, if you are in a position to efficiently counter by providing with facts proven that no, the other body corporate is not acting, or the board of directors of the other body corporate are not acting as per the instructions of the director of this company, then of course there may not exist a related party relationship between them. Your promoter is your related party. Any person on whose advice, instructions are director, on whose instructions a director or manager is accustomed to act. Such a person is a promoter of the company. He is your related party. Your holding company is your related party. Your subsidiary is your related party. Your associate company is your related party. Your fellow subsidiary is your related party. Your investing company, if you have invested more than 20% shares in a company B, then company B is your associate company. But for company B, you happen to be an investing company. The situation is that if company A Limited, if only associate company were to be your related party, and if investing company was not to be your related party, then see the anomaly. Company A has invested 25% in company B. It is holding 25% capital of company B. Company B happens to be the associate of company A. In which case, for company A, company B is the related party. But for company B, company A is not a related party because it is not there is no associate relationship between company B and company A. So that is why they have brought in to sync with accounting standards. Accounting standards captured the vice versa relationship, but the companies that did not do that. To sync with that, they brought in the concept of investing company. And hence now, even if somebody else has invested more than 20% shares in the share capital of your company, then that company also becomes your related party. So the vice versa relationship, if A has invested more than 20% in B, then B is related party to A because B is the associate company, and A is related party to B because A is the investing company. Venture companies are the venture partners are your related parties. As if this long list was not enough, they have a residuary provision which says such other person has maybe prescribed, even the such other person which the lawmakers have the power to prescribe will also be treated as your related party. In the rules, they have come with one such additional prescription, which is director or TMP of your holding company or his relative. So it is not only your director, but the director of the holding company, KMP of the holding company, and their relatives are also your related parties. I hope you are able to, if you, as an auditor, if you have to sit down and list the related parties which a company has, the list is going to be very, very big. And sometimes the list is going to be so big कि सर्फ एक्सेल के दाग की तरह ढूंढते रह जाओगे as to who is a related party. So all that I am trying to tell you is that section 2 subsection 76 is very wide in its ambit, but still if you compare section 2 subsection 76 with the accounting standards, you will see that there are certain related party relationships which are left out of section 2 subsection 76, which are left out of the Companies Act, but which the accounting standards capture. So in respect of those related parties, while you may not have to comply with the provisions of the Companies Act, you still have to make disclosure under accounting standard 18 in the financial statements. We will see whether there exist any such related parties at all. Now look at the related party relationships under accounting standards. As per accounting standard 18, para 3 defines the related party relationships. And if you look at para 3, there are 5 related party relationships which are listed in para 3 of accounting standard 18. The first such relationship is all those enterprises that are directly or indirectly through one or more intermediaries, either they control or they are controlled by, or they are under the common control with the reporting enterprise. If I am being controlled, which means I am a subsidiary company, there is somebody, my holding company, which is controlling me. So my holding company is my related party. If I am controlling somebody, then that one whom I am controlling is my subsidiary. So my subsidiary is my related party. If me and other enterprise, if we are under a common control with somebody else, which means there is a company X which is controlling me, which is also controlling Y, then me and Y are also related parties because we are fellow subsidiaries. This particular clause 3A basically covers holding companies, it covers subsidiary companies, it covers fellow subsidiaries, which is also covered by section 2 subsection 76 of the Companies Act. Then para 3B of accounting standard 18, it covers associates and joint ventures of the reporting enterprise. And the investing party are venturer in respect of which the reporting enterprise is an associate or a joint venture. So all my associates, means companies in which I have invested more than 20%, they become my related parties. Joint ventures, if I have a joint venture, then that joint venture is my related party. If somebody else has invested in me more than 20%, then my investing company is my related party. And venture partners, if A and B have come together to form a joint venture, then those venturers are also related parties to each other. My venturer is also related party to the reporting enterprise. This is also covered by section 2, subsection 76 of the Companies Act. The third relationship which is covered by Accounting Standard 18 is all those individuals who are owning directly or indirectly an interest in the voting power of the reporting enterprise that gives them control or significant influence over the enterprise. And even relatives of such individuals are also controlled. Now, this is very interesting. Individuals who have an interest in the voting power of the enterprise, which gives them control. Control is obtained by having a voting power of more than 50%. And significant influence is exercised if you have a voting power of more than 20%. So your significant shareholders who are either holding 20% or who are holding 20% or more, whether it is 20% or 70% doesn't matter, they all become your related parties and their relatives also become your related parties. A significant shareholder being a related party is a requirement of Accounting Standard 18. Section 2, subsection 76 does not have a similar provision. In none of these clauses, a shareholder is a related party. It's only here where they say that any person on whose advice, direction, or instructions you are accustomed to act, where promoter may come in as a related party, but there is no direct reference to a major shareholder or a significant shareholder being your related party in section 2, subsection 76, compared to the requirements of AS 18. So any individual, now, if you look at the definition of the term control, of course, it is when you are in a position to exercise more than 50% or more of the voting power. Significant influence can be exercised in many ways. Even holding significant directorial position can give you significant influence. But as an auditor, it may not be possible for you to go into all those subjective evaluations. So let us go into quantitative evaluation. At least let us be clear about the quantitative evaluation. And if you see that there is any shareholder who is holding, any individual shareholder who is holding more than 20% share capital in a company, then that individual shareholder automatically becomes a related party under AS 18. But such a person is not a related party under the Companies Act. Then KMP and relatives of such personnel. So KMP and their relatives. Of course, KMP, again, it's managing director, whole-time director. We know KMP, there is a definition, though the definition of KMP under AS 18 is slightly different. But then let us consider KMPs to mean executive directors as well as KMPs as defined under the Companies Act. Non-executive directors are generally not considered as KMPs unless it can be established on fact that such non-executive director is in a position to control the entire policy making decisions of the company. A non-executive director generally is not a KMP. So your executive directors and other KMPs and their relatives are also related parties as defined in the Accounting Standard. And then you have the last clause in Accounting Standard 18, which says, all those enterprises over which any person described in CRD is able to exercise significant influence. which means if your major shareholders, which are covered by clause 3C, or if your directors who are covered by clause 3D, if they are holding more than 20% share capital of any other company, then such other company also becomes your related party. It also becomes a related party of the reporting entity in terms of this particular clause of AS 18. This clause also you will not find in section 2 subsection 76. If Mr. X holds 30% in company A, 30% in company B, 30% in company C, 27% in company D, if he holds such shareholding in say 20 different companies, all those 20 different companies become related parties. Similarly, if your KMP, if your managing director, if he is in a position to exercise significant influence over some other company, either by virtue of holding 20% shareholding or by occupying similar position, then even those enterprises, those entities also will become your related parties. This is again not covered by section 2 subsection 76, as you can see. Enterprises controlled by significant shareholder and enterprises controlled by significant shareholders do not find a place in the definition of related party under section 2 subsection 76 of the Companies Act. But they are related parties as far as Accounting Standard 18 is concerned. Now, having understood who is a related party under the Companies Act and what is a related party relationship under Accounting Standard 18, I would have loved to straight away go to compliance requirements under section 188 and other provisions of the Companies Act. But I will seek your indulgence and also take you through related party relationships, the manner in which it is defined in AS 24, so that we have a better idea of related party relationships and the wide gamut in which it is spread in. As per Ind AS 24, any person or any close member of a person, if he is either in control or in joint control over the reporting enterprise, then he is a related party to the reporting enterprise. Any person or a close member, if he is in a position to exercise significant influence over the reporting enterprise, then he is a related party to the reporting enterprise. Same as AS 18. Again, close member is slightly different. There they use the term relative. Here you have the term close member. Any person or close member, if he is either a KMP of the reporting enterprise or of its parent, then such a person is also your related party. So my significant shareholder who is holding more than 50% shares in me, either simply or jointly, he is a related party. My significant shareholder who is holding more than 20% shareholding, who is in a position to exercise more than 20% voting power in me, he is my related party. The TMP is my related party. TMP of the parent is a related party. And when thereafter we see the entities which become related parties to the reporting entity. Entity and reporting entity are members of the same group. Now the concept of group comes in. One entity is an associate or joint venture of the other entity, or an associate or joint venture of a member of a group of which the other entity is a member. Both entities are joint venturers of the same third party. One entity is a joint venture of the third party and the other entity is an associate of the third party. To understand these, let us see a pictorial representation. Entities and reporting entities are the members of the same group. Same group means parent, subsidiary, fellow subsidiaries. So pair reporting entity, holding company, subsidiary company, fellow subsidiaries, they all constitute one group and they are always related parties to each other. But this group concept is relevant. It becomes very important as you see the other clauses. One entity is an associate or joint venture of the other entity, or an associate or joint venture of a member of a group of which the other entity is a member. I am a reporting entity. The subsidiary, the holding company, the fellow subsidiary, they are all my group. There is one associate or JV of the holding company. That associate or JV of the holding company becomes related party to all the members of the group. My associate, my JV is definitely my related party. But the associate or JV of any entity of the group, an associate or JV of the subsidiary will be a related party to the holding company as well as to the other fellow subsidiaries. I hope you are able to see the wide canvas on which this picture is being painted. Even when an associate, if one entity is an associate or joint venture of a member of a group, so such associate or joint venture will also become a related party to the reporting entity if it is a part of the group. Both entities are joint venture of the same third party. So there is a third party company A Limited. It has two joint ventures, joint venture AX, joint venture AY. AX and AY are related parties to each other. One entity is a joint venture and the other entity is an associate. So I am a third party. To me, my joint venture is my related party, my associate is my related party, but the joint venture and associate are also related parties to each other. Joint, you may say associate and joint ventures don't form part of the group. But if the same company has a joint venture and has an associate, then those two entities inter se also become related parties to each other. The entity is controlled or jointly controlled by a person who has control or joint control over the reporting entity. This is covered by AS 18 also. Any person who is in a position to exercise significant, if there is a person who is in a position to exercise control over me, all those entities over which he is in a position to exercise control, they all become my related parties. AS 18 also covers this. If there is Mr. X, and if Mr. X holds more than 50% shares in 10 different companies, then all those 10 different companies become related parties to each other, which is also a requirement, which is also there in AS 18. A person who is in a position to exercise control over the reporting entity, he has significant influence over the entity, or he is a member of the KMP of the entity or a parent of that entity. Which means if Mr. X holds 50% shares in me and I am the reporting entity, and Mr. X holds 25% shares in 20 other companies, then all those 20 other companies also become my related parties. Because he is having control over me and he is in a position to exercise significant influence over those 20 other companies. Mr. X holds more than 50%, holds control over me, and Mr. X happens to be a KMP of some other company. That other company also becomes my related party. But one thing that you would have noticed, my subsidiary is my related party, but my subsidiary's related party is not my related party. Transaction with me, it is only transactions between me and my related parties which are required to be complied with or which are required to be monitored. My subsidiary is my related party. So whatever transaction that I do with my subsidiary, that is required to be reported by me. That is required to be complied at my level. But the transaction which my subsidiary does with my related party, or the transaction which my subsidiary does with its related party, is not a transaction which I am required to comply with at my level. Though as a part of consolidated statements, they even otherwise get knocked off. But even at the compliance level, it is only at the subsidiaries level that compliance needs to be done, not at my level. In fact, it is this particular part, it is this particular omission, which the amendment to the LOADR is seeking to check. It was this particular thing which was left out, and this particular amendment which came on 9th is aimed at capturing these transactions only, to which the related party, the listed entity, is not a party to the transaction, but the subsidiary of the listed entity is a party. Of course, that's not the subject of our discussion today, so we'll not go into those. Now, having understood who is a related party, the next thing that comes to our mind is, what are related party transactions and which related party transactions require compliance to be done? Does every transaction which is done by a company with its related party required to be complied with under Section 188 of the Companies Act? Or is it only particular transactions which are required to be complied with as far as Section 188 is concerned? Only those Section 188 transactions, are they only required to be disclosed in the financial statements? The answer is no. The disclosure will be guided by AS 18. And AS 18, the related party transactions may be much, much more wider than what is covered by Section 188. So while there may not be any need to comply under Section 188, there may still be a need to disclose those related party transactions in the financial statements. Mundraji rightly said that during the course of scrutiny which the Office of the Registrar of Companies is undertaken, it has been widely found. I'm sorry to say that we as auditors have been quite nonchalant in reporting of related party transactions in the financial statements. Even when the schedule of investments clearly shows investment of more than 20-30% in a particular enterprise, yet those transactions with those enterprises are not reflected in related party disclosures in several cases which the Registrar of Companies is finding out during the course of scrutiny. The number of scrutinies are too many at present in Calcutta, and hence we can feel the heat. The cost of non-compliance, I must tell you, is very, very high. And therefore, it becomes very important for us as auditors to ensure that related party is one aspect, but the accounts are prepared in the manner in which they are mandated under Section 129 of the Companies Act, read with Schedule 3, and all requisite disclosures are made as required under Section 129 accounting standards and Schedule 3 of the Act. Unfortunately, the financial statements glaringly in several cases, there are glaring omissions, glaring instances of non-compliances with respect to several of these provisions. Without going into that, Section 188, what kinds of related party transactions does it cover? Sale, purchase, or supply of any goods or materials. So whatever be the goods, whatever be the materials, any sale, purchase, or supply is a transaction. If it is entered between a company and a related party, then it's a related party transaction. Selling, buying property of any kind. In the first point, you would have seen it is only. Is anybody? Hello? Should I continue?
Yeah, yes, please continue.
Selling, buying property of any kind. If you see the first clause, it covers goods, and goods only cover movable properties. They don't cover immovable properties. So the second clause covers selling, buying property of any kind. So even immovable properties, tangible, intangibles, they are all covered by this particular clause. leasing of property of any kind, any transfer of right to use, even licensing or rent agreements also, as they have an element of transfer of right to use, would be covered. Availing or rendering of any services, whatever be the kind of service. Appointment of agent for purchase or sale of goods, materials, services, or properties. So sales agents, purchase agents, property brokers. If you have any transactions, if they happen to be your related party, and if you have any such transaction, then if you are appointing any of your related party as a property broker or as a sales agent, as a commission agent, commission to wife, commission paid to son, very, very common. Son of a director, I mean. Appointment to any office or place of profit and underwriting of securities. If you will see, virtually any kind of transaction that you can contemplate, if it whether it relates to a movable property, whether it relates to an immovable property, whatever be the service arrangement between you and the related party, whatever be the agency agreement between you and the related party, all transactions are covered by Section 188. The only notable exceptions are financial transactions, loans, giving of guarantees, provision of securities. Those are the only transactions which are not covered by Section 188. Apart from that, almost every transaction is covered by Section 188. Loan transactions, guarantee transactions, or company providing its asset as a security for a loan taken by somebody else. So a transaction to provide security, those are not covered by Section 188, though there is a specific Section 185 in respect of those transactions. But 188 excludes perhaps only those kind of transactions, but rest all other type of transactions seem to be covered by Section 188. But look at the definition of transactions under the accounting standards and LODR, of course. They are so widely worded. Any transfer of resource or obligation or services between reporting enterprise and another entity. Any transfer of resource or obligation. Money is your resource. So if you are given the loan, it is covered by accounting standards. Services and obligations, majority of them are also covered in 188 as well. So whatever is left out by Section 188, Accountant Standard 18 seems to cover almost everything. Any transaction that you do with your related party that is required to be in accordance with, required to be disclosed in accordance with the accounting standards. So while in respect of loan transactions, it may not be necessary to comply the provisions of Section 188. It will be necessary to disclose such loan transactions between related parties in the financial statements as per Accounting Standard 18. It should not be taken to mean that whatever is disclosed in the financial statements would require compliance under Section 188. That's not the case. But yes, whatever is taken under, whatever transaction is entered under Section 188, that invariably has to be disclosed in the financial statements under AS18. Some examples of related party transactions are given in Ind AS, and you will see some interesting examples that are listed. Provisions of guarantees or collateral, transfers under finance arrangements. As I said, these are not covered by Section 188, but these are covered by accounting standards. Deputation of employees, if you see the last one, deputation of employees. Deputation of employees, I mean, whether it is transfer of your resource to somebody, and if it is being given to a related party, then yes, even those transactions will be covered by accounting standards. So the coverage of accounting standard is much, much larger in comparison to the coverage of related party transactions under Section 188. Having understood who is a related party, what are related party transactions that are covered by Section 188, we now need to look at the compliances that we need to do under Section 188 and under other provisions of Companies Act. Here I'll pause for a while and take you through one more important section, which is Section 177 of the Companies Act. Section 177 of the Companies Act deals with audit committees. And that particular section says that all transactions with related parties, it doesn't cover transactions under Section 188 alone. It says all transactions with related parties will require approval of audit committee. Now, one thing that is to be understood, that this particular provision, Section 177, does not apply to private limited companies. In fact, it applies only in respect of those public companies which are unlisted and which either have a capital of a particular threshold or a turnover in excess of a particular threshold, or have made borrowings in excess of a particular threshold. So if there is an unlisted public company which either has capital, borrowing, or turnover more than the specified limits, then to such a company, the provisions of Section 177 becomes applicable. You may be auditor of many such companies. And there, compliance with the requirement of Section 177 also becomes important. And 177 light accounting standards covers all transactions with related parties. It does not exclude loan transactions or guarantee transactions or collateral transactions as Section 188 does. So approval if your company happens to be an unlisted public company to which the provisions of section 177 are applicable, then besides compliance of section 188, you also have to be careful with respect to compliance of section 177. I'm not going into the details of section 177. I'm not going into the details of the compliance requirements by the audit committee. I'm limiting myself only to the provisions of section 188. And if you look at the provisions of but just to quickly summarize, if you can see from the bottom, if you happen to be a private limited company or an unlisted public company below the threshold of a particular capital limit, turnover limit, or borrower limit, then you have to comply only with section 188 of the Companies Act and nothing else. But if you happen to be a public company above those thresholds, then besides section 188, you also need to comply with section 177. And if you happen to be a listed entity, then besides section 188, besides section 177, you also need to comply with the requirements of the LODR provisions. Again, LODR provisions may not be applicable to all listed companies. I'll not go into that detail now. There are certain listed entities which are exempt, and dependent on their net worth, their capital, they may not have a requirement to comply with regulation 23 of the LODR. Now coming to the approval mechanism. As I said, all transactions, if section 177 is applicable, requires approval of audit committee. Audit committee has the power to grant omnibus approvals. Board approval is needed for RPTs fallen under section 1. If yours is a related party transaction under section 188, then you need to comply with the provisions of section 188. And there, I'll just take you through the provisions of section 188 quickly. Just a second, there's one particular slide that seems to be missing. In any way, to quickly take you through the provisions of section 188, all 188 transactions will require approval of board of directors of the company. And that approval has to be driven by the board of directors of the company at the meeting of board of directors. So if a transaction, if it's a related party transaction to which section 188 applies, then board has to approve such transaction, and only after the board has approved such a transaction, that too at its meeting, that such a transaction can be undertaken. If the transaction is in excess of specified values, in respect of each of these transactions, Rule 15 specifies different values for sale, purchase, or supply of goods, for services, for your agency contracts. There are different values assigned by Rule 15. And if your transaction is in excess of those limits which are prescribed, then you will require approval of shareholders as well. Then those transactions will also require approval of shareholders. For example, if the transaction is in excess of 10% of the turnover of the company, then it may require approval of the shareholders. And at that meeting of the shareholders, in respect of that resolution, related parties will not be allowed to vote. Now, when I say related parties will not be allowed to vote, the ministry has come out with a clarification which says that related parties which are related in that particular transactions will not be allowed to vote. And one notable exception is that the provisions of section 188 will not apply if the transaction, besides being in the ordinary course of business, is on an arm's length basis. So if a transaction which is in ordinary course of business of the reporting entity and is on an arm's length basis with the related party, then nothing contained in section 188 is applicable to it. So no board approval, no shareholders approval is needed in respect of such transactions where the transaction is in the ordinary course of business and on an arm's length basis. Now, of course, as an auditor, you may have a duty to certify whether a transaction is on an arm's length basis or not. You may even have a duty to verify if the management certifies that the transaction is on an arm's length basis. Otherwise, you will have to ensure that the requirement of section 188, which is approval of the board of directors first, and if the transaction is material in nature, which means it exceeds the value which is provided in Rule 15, then approval of the shareholders. Of course, section also provides that yes, if a transaction is not undertaken in compliance of the provisions of section 188, then within a period of 3 months, it has to be ratified by the board or by the shareholders, whosever approval is necessary. And if during this process, if the company, such transactions which are undertaken without the necessary approvals under section 188, either of the board of directors or of the shareholders, then those transactions are avoidable at the option of the company. And if the company suffers any loss on account of such transactions, then the directors who are responsible for undertaking such transactions will be required to compensate the company for such losses. So to quickly understand, to quickly summarize, if you are entering into a transaction with a related party, if you are so let us first talk about private limited companies. If you are a private limited company, then the only compliance that you need to do under the Companies Act is comply with the requirements of section 188 and nothing else. If a transaction is entered with a related party and the transaction happens to be one which is covered by section 188, then ensure that such transactions are duly reported in the minutes of the board of directors. Approval of the board of directors is duly noted. And such, of course, once you have such a transaction, necessary disclosures are made under accounting standards as required under the respective accounting standards. If you happen to be a public limited company above the specified thresholds, to which section 177 also applies, then first ensure that audit committee's approval is there. It is followed by the approval of the board of directors. And then if the transaction is material in nature, then it is followed by the approval of the shareholders. Omnibus audit, as I said, audit committee has the power to grant omnibus approvals. Now this becomes very interesting. This omnibus provision is under section 177 of the Companies Act. And since section 177 is applicable to only certain specified companies, the benefit of an omnibus approval will also be applicable only to those companies, because it is only they who will be having audit committees. So while audit committees can take an omnibus approval in respect of a repetitive transaction, a private limited company may not have similar benefit of taking omnibus approval. It will have to take specific approval under section 188 in respect of every transaction that it enters with related party. This, if you enter this can be avoided. This can be avoided by entering into agreements covering various transactions and taking approval of those agreements at the board meeting in one row. But technically speaking, the omnibus approval requirement is a benefit which is available only to those companies to which section 177 applies. As far as other companies are concerned, they will have to take specific approval for related party transactions that they enter with their related parties. They can widen the scope of one particular transaction by entering into an agreement in respect of different arrangements, but still that particular agreement or that particular arrangement has specific approval of the board of directors, and if it is material, then of the shareholders is required to be taken. Now, if you see section 188, it says every contract or arrangement has to be referred to in the board of directors of the in the board's report to the shareholders. As far as section 129 is concerned, accounting standards have to be complied with, and therefore related party transactions are required to be disclosed in the financial statements as required under the accounting standards. If you look at the provisions of section 134, which deals with the report of the board of directors, it clearly says that the board's report has to include particulars of contracts or arrangements with related parties, which are referred to in section 188. You have that AOC 2 or whatever it is. And rule 15.2, which says that if a director is interested in any particular contract with related parties, such director shall not be present at the meeting. So if you are, if we don't prepare minutes, of course, minutes are rarely prepared. But if there is any inquiry and if to support a question whether 188's compliance has been done or not, if you produce minutes before the inquiry officer, then just ensure that in those minutes you also take care of the fact that an interested director is not shown to be present at the meeting for discussion. Similarly, all those board meetings where related party transactions are required to be approved, the agenda of the board meeting has to have these disclosures. The name of the related party, nature, duration of the contract, material terms of the contract, advance paid, manner of determining the price. All those factors are required to be disclosed in the agenda of the board meeting where a transaction with related party will be discussed. And if the transaction is material in nature, it will go to shareholders. And in the notice to the shareholders in the explanatory statement, again, several things are required to be disclosed. If as an auditor, if you have a duty to ensure that related party transactions have been done in compliance with section 188, these are also requirements of section 188, and you have to ensure their compliances as well. Where will you find notice of the board meeting? In case of private companies, what notice? What minutes? What agenda are we talking of? Of course, shareholders meeting, since it's required to be filed or it's required to be maintained, then you will have the notice and the explanatory statement. But ensure that the explanatory statement contains all these details which are required to be. Friends, I am not taking you through the LODR requirements. We have, there are lots and lots of issues to discuss in case of listed entities, which we are not discussing today. But as far as unlisted entities are concerned, as far as private limited companies are concerned, section 188 is a very, very small provision. And the only compliance requirement is board's approval, followed by a shareholder's approval in case of material transaction. No approval if the transaction is in ordinary course of business at an arm's length basis. And then ensuring that necessary disclosures are made in the financial statements in accordance with accounting standards. But what is most important is identifying the related parties and ensuring that the transactions done with them are duly reported in the financial statements in accordance with the accounting standards. Thank you. I think I'll start I've initiated the process. We will continue the dialogue. We will keep on discussing this. I won't call it a question answer session. We can have a brainstorming over any particular case issues that you may have, any particular specific issue that you may have, so that I can present my views and other participants can also present their views. I leave it for the organizers to decide how they want to carry it forward. Over to you.
Whether any participant has got any question to ask? भाई जी नेक्स्ट ले लीजिए, कोई क्वेश्चन तो है नहीं। मनोज जी,
हाँ
नेक्स्ट पे चलते हैं, कोई क्वेश्चन तो कोई है नहीं, कोई रेज नहीं कर रहा है क्वेश्चन।
नहीं, नेक्स्ट मतलब और क्या है इसके बाद? I have covered 188 as well as Accounting Standard 18. Is there anything else that you want me to speak on?
हाँ मनोज जी,
मैंने 188 और AS 18 दोनों कवर कर लिया है, और कुछ बोलना है?
अगर दोनों कवर हो गया तो फिर और तो कोई रिक्वायरमेंट है नहीं। एक क्वेश्चन चैट बॉक्स में मैं पूछ लेता हूँ आपसे।
हाँ पूछ लीजिए सर, पूछ लीजिए।
Mr. Pawan का क्वेश्चन है, if there is no transaction with any related party, is there any requirement to disclose names of related parties in relation to the reporting entity?
This is very interesting. In fact, this is one of the questions that often comes in the inquiry, which the Registrar of Companies does. Accounting Standard 18 is very, very clear. All those enterprises with which there is a relationship of control that is existent, those are required to be disclosed. all those related party relationships are required to be disclosed. But as far as other related parties are concerned, they are required to be disclosed only if there exists transactions with those related parties. So if a company has, say, about 100 related parties, but the relationship of control exists only with respect to, say, 5 related parties, then the names of those 5 related parties and the names of the KMPs, they are required to be disclosed irrespective of whether there is any transaction or not. Now, control again has been defined. Control again has been defined to mean control of the shareholding or control of the composition of the board. That is understood because that is a very quantifiable thing. There is one more limb which says any substantial interest in the voting power. Now, substantial interest in the voting power, accounting standards have clarified to mean 20% or more of the voting power. So while you say relationship of control, what we understand is 50% or more. But you define control as one which where even substantial interest is there. And substantial interest is defined to mean 20% or more of the voting power. So this creates a situation, this creates an anomalous situation. And normally what we understand from this is that all those entities where you have a relationship which you hold more than 20%, 50% से ऊपर है तब तो देना ही देना है, but even where there is more than 20%, even their names are required to be disclosed irrespective of whether you have transactions with them. Otherwise, only those related parties are required to be disclosed where there is a relationship of. Yeah, yes, please.
Participants are required to mute themselves because there is a lot of disturbance. तो जिनको क्वेश्चन पूछना है वही खाली अपना अनम्यूट करेंगे प्लीज।
मेरा क्वेश्चन है मनोज जी, ये रिलेटेड पार्टी ट्रांजैक्शंस तो ईच एंड एवरी कंपनी के ऊपर में एप्लीकेबल ना, इररिस्पेक्टिव ऑफ साइज।
यस
क्योंकि ये बहुत सी एक चीज मैं जानना चाहूंगा फॉर द बेनिफिट ऑफ द डेलीगेट्स कि अभी जैसे आरुषि की बहुत सारी नोटिसेस आ रही है जिसके अंदर में नॉन कंप्लायंसेस आ रहे हैं, तो इसमें अपने को रिलेटेड पार्टी से रिलेटेड किस टाइप के नॉन कंप्लायंसेस हो रहे हैं, जिस जो थोड़ा सा समझना चाहेंगे आपसे।
जैसे मैंने बताया, मैंने स्टार्टिंग में एक एग्जांपल दिया था, आपके इन्वेस्टमेंट्स में सामने ही पता है कि एक पर्टिकुलर कंपनी में आप 30% से ज्यादा शेयर होल्ड कर रहे हैं, और इनकी इंक्वायरी में पता चला है कि उस कंपनी से आपने लोन भी ले रखा है या उस कंपनी को लोन भी दे रखा है। तो चूंकि वो 30% से ज्यादा आप होल्ड कर रहे हो तो वो आपकी रिलेटेड पार्टी है, और आपने लोन ट्रांजैक्शन या तो ले रखा है या दे रखा है, तो आपने वो ट्रांजैक्शन भी कर रखा है उसके साथ, और उसका रिक्विजिट डिस्क्लोजर आपके फाइनेंशियल स्टेटमेंट्स में रिलेटेड पार्टी डिस्क्लोजर्स में आया नहीं है। परचेज सेल के
आइडेंटिफिकेशन ऑफ रिलेटेड पार्टी नहीं हुई है बात ये।
मेनी ऑफ द मोस्ट ऑफ द टाइम्स आप जानते हैं वो रिलेटेड पार्टी है और उसके साथ ट्रांजैक्शन भी है, पर उसका रिपोर्टिंग नहीं होता, उसका डिस्क्लोजर नहीं हो रहा है। आई एम नॉट एबल टू हियर हिम। आप म्यूट पे है सर, सुन नहीं पा रहे हैं आपकी बात सर। सर आप म्यूट पे हैं, आपकी बात नहीं सुन पा रहे।
सॉरी हाँ, मैं कहना चाह रहा हूँ कि मेरा जो अंडरस्टैंडिंग है कि irrespective of whether there has been the related party transactions or not, one should give a note in the balance sheet that there has been no transactions with the related parties during the year. अगर कोई ट्रांजेक्शन नहीं होते हैं तो, क्योंकि एक मैंडेटरी डिस्क्लोजर है, कंप्लायंस है, तो अगर मैं ये नहीं लिखूंगा तो आरओसी को पता कैसे चलेगा कि हमने इस चीज को चेकिंग किया कि नहीं किया, इसकी रिपोर्टिंग है कि नहीं है।
एडिशनल डिस्क्लोजर में तो कहीं कोई ना है नहीं सर, इट्स ऑलवेज वेलकम। आप जितना ज्यादा डिस्क्लोज करना चाहे कंपनी कर सकती है, बट जो स्टैट्यूटरी डिस्क्लोजर जो अकाउंटिंग स्टैंडर्ड स्पेसिफिकली आपसे चाहता है, वो वही चाहता है कि आप पर्टिकुलर फॉर्मेट में AS 18 का जो पर्टिकुलर फॉर्मेट है, कौन आपके रिलेटेड पार्टी है, किसके साथ रिलेशनशिप ऑफ कंट्रोल है नहीं, और किसके साथ में ट्रांजैक्शन है नहीं, तो वो ऑटो जो बात आप बोल रहे हैं वो ऑटोमेटिकली आ जाती है। आप जैसे ही AS 18 के फॉर्मेट को फॉलो करेंगे, आपको ऑटोमेटिकली वो बात आ जाएगी कि वेदर किसी के साथ में मेरे ट्रांजैक्शन है या नहीं।
तो वो बेसिक कंट्रोल आ गया, ट्रांजैक्शन है तो हम देंगे, अगर ये तो नहीं देंगे, बस सीधी सी बात है।
यस
नहीं, मैं इसलिए आपसे स्पेसिफिकली करवाना चाहता हूँ कि मैंने बहुत सी बैलेंस शीट देखी जिसके अंदर में रिलेटेड पार्टी से रिलेटेड कुछ इंफॉर्मेशन नहीं रहती है।
ठीक, द पॉइंट
That is the reason I have asked you कि ज़्यादा स्पेसिफिकली आप एक्सप्लेन करें इसे।
Absolutely. No, this is the point which we have already made now.
नहीं वो ठीक है, लेकिन और एक कुछ और थोड़ा सा अगर आप समझा पाए कि अभी जो आरओसी की नोटिसेस आ रही हैं, इस पे किस टाइप के नॉन डिस्क्लोजर्स, नॉन कंप्लायंस की पॉइंट्स ज्यादा उठ रहे हैं?
Apart from RPT,
या
एक सबसे कॉमन पॉइंट है इन्वेस्टमेंट्स का।
इन्वेस्टमेंट की शेड्यूल प्रॉपर नहीं है,
इन्वेस्टमेंट्स का डिटेल रहता ही नहीं है।
डिटेल नहीं रहता है, शेड्यूल भी प्रॉपर नहीं है। दैट आई हैव सीन इन मेनी बैलेंस शीट्स, क्योंकि पार्टली पेड है, फुली पेड है, नंबर ऑफ शेयर्स है, कंपनीज का नाम है, नंबर ऑफ क्या पेड है, वैल्यू कुछ नहीं रहता है।
रहता ही नहीं है। दैट इज वन ऑफ द मोस्ट कॉमन वायलेशन, दैट इज वेरी से जो देखा जाता है। दूसरा क्या है सर, शेड्यूल 3 का जो फॉर्मेट है, ये जरूरी नहीं है कि हम वर्ड बाय वर्ड शेड्यूल 3 को फॉलो करें, पर जहां जैसे जैसे शेड्यूल 3 में कई चीजें होती है जहां अदर्स बोल के दिया है, और शेड्यूल 3 में लिखा गया है ब्रैकेट में स्पेसिफाई नेचर, जैसे पेबल्स हैं अदर्स बोल के दे दिए हैं, अपने शॉर्ट टर्म बोरोइंग से अदर्स बोल के दे दिए हैं, और उसको शेड्यूल 3 क्लियरली बोलता है कि उसका नेचर स्पेसिफाई करिए। ट्रांजैक्शन एक्सपेंसेस है तो उसका नेचर स्पेसिफाई करिए। ये नेचर स्पेसिफिकेशन जो है वो कहीं भी किसी भी बैलेंस शीट में जनरली जहां छोटी बैलेंस शीट्स में देखने को नहीं मिलता है। एंड दिस इज वन मोर कॉमन वायलेशन जो एकदम सामने उभर के आता है इन बैलेंस शीट्स में सर। नेट इन ऑफ और जो रीकास्टिंग होती है उसको भी आरओसीज वायलेशन मानते हैं। आई डोंट नो कहाँ तक अगर कोई कोर्ट में उनको ले जाए या कहाँ तक वो सस्टेन कर पाएंगे, बट रीकास्टिंग को भी बहुत बहुत कॉमनली एक मिस्टेक माना जाता है सर। आई मीन मान लीजिए आज आपने रीस्टेट किया, आज बैलेंस शीट में एक आइटम किसी हेड में इस साल है, एंड दूसरे साल इफ इट हैज बीन रीस्टेटेड एंड इट हैज बीन recasted somewhere else, then ROC always points it out as a violation, और ये एक बहुत बड़ा कॉमन मिस्टेक है जो उभर के आता है बैलेंस शीट्स में सर।
लेकिन रीग्रुपिंग ऑफ एक्सपेंसेस तो अलाउ है सर।
हाँ नहीं, अगर मैं यही बोल रहा हूँ, अलाउड या डिसअलाउड में मैं नहीं जा रहा हूँ, मैं इस चर्चा में नहीं जा रहा हूँ। आपने पूछा कि कौन से कॉमन जो इश्यूज हैं जो वायलेशन।
नहीं ठीक है, कैन आई अंडरस्टैंड।
मोहन जी एक क्वेश्चन था।
हाँ,
जैसे अपने को जो ये रिलेटेड पार्टी ट्रांजैक्शन जो डिस्क्लोज करना फाइनेंशियल स्टेटमेंट में, अकाउंट्स में, वो अपने को क्या ग्रुप करके करना है? जैसे जो अपना जो AS 18 का जो है उसमें लास्ट में जो इलस्ट्रेशन जो दिया हुआ है उसमें क्या है कि हेड वाइज दिया हुआ है, फिर रिलेटेड पार्टी वाइज दिया हुआ है, KMP सब्सिडियरी टाइप से। तो टोटल ट्रांजैक्शन देना चाहिए या अपने को पार्टी वाइज अलग अलग देना चाहिए?
नहीं, पार्टी वाइज तो अलग अलग तो देना, आई मीन आज आपके 25 पार्टी हो रही तो देना संभव ही नहीं हो पाता है। आपको ट्रांजैक्शन तो देना ही पड़ेगा, बट यस आपको रिलेशन बताना पड़ेगा कौन सा किसके साथ कैसे है, क्या है, नहीं है। एंड दैट कैटेगरी वाइज हैज टू बी डिस्क्लोज, जो अब हर बैलेंस शीट में उसी तरह से डिस्क्लोज होता है।
लेकिन जहाँ पर सर लोन ट्रांजेक्शन है वहां पर अगर हम पार्टी वाइज नहीं देंगे तो हम ईयर एंड बैलेंस कैसे बताएंगे?
नहीं, अब जैसे लोन ट्रांजैक्शंस की बात आ रही है तो लोन ट्रांजैक्शन सब्सिडियरीज है तो वो हेड इन सब्सिडियरी में आ जाएगा।
ओके
अगर वो एंटरप्राइजेस ओवर विच योर KMP इज इन ए पोजीशन टू एक्सरसाइज इन कंट्रोल तो उस कैटेगरी में आ जाएगा। उस तरह से उनको बताया जाता है।
लेकिन पार्टी वाइज भी डिटेल देते हैं तो कोई तकलीफ नहीं है। दैट इज एडिशनल डिस्क्लोजर इफ समवन गिव्स।
सर वो तो बहुत ही बढ़िया है। आप ज्यादा दे तो ना पता है। दैट्स वेरी वेल। अगर आपके एक या दो चार पार्टी है तब तो अलग बात है, पर जहाँ नंबर ऑफ पार्टीज हंड्रेड्स है वहां कहाँ दे पाए।
हाँ वो ठीक बात है। और कोई क्वेरी है क्या विष्णु ग्रुप में?
ना कोई
चैट बॉक्स में
चैट बॉक्स में कोई क्वेरी नहीं है और
कोई क्वेरी नहीं है।
अच्छा मोहित जी एक थोड़ा सिली टाइप का क्वेश्चन है। मनोज जी एक सिली टाइप का क्वेश्चन है कि ये जो डिफरेंट जैसे अपना सेक्शन 276 में अलग डिफाइन किया रिलेटेड पार्टी को, AS 18 में कुछ डिफरेंट है, 3-21 में कुछ डिफरेंट है, तो ये पर्पस रिपोर्टिंग पर्पस के हिसाब से किया गया है? मतलब पर्पस क्या है इसके अंदर डिफरेंट करने का?
नहीं देखिए AS 18 तो पहले से ही चला आ रहा है। AS 18 was even prior to section 2 subsection 76. हेलो AS 18 तो पहले से ही चला आ रहा है। and when 2 subsection 76 came in, intra compliance का जो requirement था, I don't know, somehow they felt that they are trying to be more wider than accounting standard 18 and they are trying to cover related parties more than what is provided in AS 18. तो उनको एक कंपनी पॉइंट ऑफ व्यू से जो लगा कि जिस तरह से रिलेटेड पार्टी इंटरेस्ट, कंपनी का इंटरेस्ट सफर नहीं हो और डायरेक्टर्स अपने इंटरेस्ट को पैरामाउंट नहीं बना दे, उसको ध्यान में रखते हुए उन्होंने उस तरह से 2 सबसेक्शन 76 को डिफाइन किया। बट धीरे धीरे सिंक्रोनाइज होते जा रहे हैं सर, धीरे धीरे एट होते जा रहे हैं। जैसे आप सेबी तो देखिए, LODR कोई डेफिनेशन में गया ही नहीं। वो तो उसको लगा कि भाई कंपनी जब कुछ और बोल रहा है और अकाउंटिंग स्टैंडर्ड कुछ और बोल रहा है तो वो बोलता है भैया दोनों मिलाते ही मेरे रिलेटेड पार्टी हैं, चाहे वो रिलेटेड पार्टी 276 का हो या अकाउंटिंग स्टैंडर्ड का हो, बोथ आर रिलेटेड पार्टीज एज पर फॉर ए लिस्टेड एंटिटी। सो ग्रेजुअली देयर इज अ सिंक्रोनाइजेशन और आने वाले टाइम में डिफरेंस खत्म हो जाएगा सर। देयर विल नॉट बी एनी। राइट सर।
Any other question from any other participant? क्लोज करें प्रमोद?
हाँ ठीक है, चलो कोई दिक्कत नहीं। मैं तो नेट जो है गड़बड़ होने से है, मैं तो आगाज सुन ही नहीं पाया।
हाँ तो हम
नेट जो है ना लॉगिन कर रखा हूँ।
Thank you Manoj ji for doing such a wonderful deliberations on related party transactions and its disclosure. काफी सारा कंफ्यूजन था जो आपने दूर किया और हमारे CA जो हमारे प्रोफेशनल कलीग्स है उनके लिए आपसे एक एडवाइस मिली है कि किस तरीके से हम लोग को रिलेटेड पार्टी की लिस्ट लेनी है और किस तरीके से सारे ट्रांजैक्शंस को रिकॉर्ड करके उनका प्रॉपर कंप्लायंस हुआ या नहीं और उनका प्रॉपर डिस्क्लोजर एज पर AS 18 और Ind AS 24 हो रहा है या नहीं, ये सारा हम लोग इंश्योर करेंगे। थैंक यू for guiding us and such a wonderful deliberations.
Thank you very much. Bye.
थैंक यू मनोज जी।
Bye sir.